Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, March 12, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, we don't have new all-time highs, but we have almost new all-time highs. We're going to talk about markets in an uptrend. We're going to talk about signs and or signals of a trend change. We're going to talk about melt-up situations. This market is in a melt-up situation. And what we say when markets are new all-time highs, that you have to wait for a sign and or signal of a trend change. Now, we made a case that Friday's candle could be a reversal candle, had some uptick in volume, was a new high, finished on the lows. It had some characteristics of top-ish type qualities, but here we are, not far from the all-time highs, just a couple of trading sessions later. It's hard to kill a bull. That's right. It's hard to kill a bull market. Looking at the weekly chart, we had another tail last week, a doji candle. Here we are up near the highs, but where is the week going to close on Friday? We don't know that in advance, but that's the important thing from a weekly chart perspective. Close the week above last week's high, and there is no signal of a time or trend change. From a weekly chart perspective, we are in an on-time week type of situation. We'll finish where they close, see where they close on Friday, and take our cues from there. What we do have from a weekly chart perspective is a little bit far away from home base, extended from home base. What's home base? The 20-period moving average, the red sloping trend line. While the trend is your friend until your crap gets thrown out the window, still, she never likes to get too far away from home base without eating some time off the clock, letting home base march up toward price, or having a pullback situation toward home base, working off some of that air-quoted overbought condition. And the reason I air quote that is because there's no measurement for an overbought condition, but we know the market gets a little bit too far, too fast, a little overextended, and she's got to work some of that off. Today's excuse was the phony CPI data number at 8:30 a.m. We had the data release. They decided to goose the tape, but they didn't goose it right out of the gate all day for the entire day. They had what's called a morning shakeout operation. Were we able to take advantage of the morning shakeout operation from a live trading room and inside the numbers perspective? The question is, did my traders make money right out of the gate today? Did we catch low of day? You betcha. Now at 0:30, we've got a turnaround Tuesday. We've got green on the screen. The trend is your friend. We have a bull pivot. The bull pivot was 511.95. Write that down for a moment. We had a gap left open yesterday down at 511.25. We had 513.80 as initial overhead resistance. These numbers will show up again. Case in point, the blue line is at 513.80. As you can see, this arrow here, first 5-minute candle of the day, the high is 513.80. Pretty slick. Retested it again. Oh, by the way, how about early afternoon? How about a test from above and the bounce off for the rest of the day? 513.80 was identified at 0:30 this morning. Let's focus our attention down at 511.95, 511.25. You can see they spiked it by a little bit. We also caught that low. I said to the traders in the room at that time during the morning when they were selling them off in the morning shakeout operation, I said right around 511, 510.90 is the line in the sand, much below that, and they go down another leg. They have to bounce the tape here, and they did. This is exactly what the chart for the live room members looked like down at 510.90. Low of day, 510.86. How you doing? We had plenty of traders make boatloads of money today on the bounce back morning trade, catch the low of day situation. Pause the video, read the notes, go back to the chart, and double check the work. We had a service announcement today. I was only here in the live room for half an hour. Then Jordan took over, but our trade was officially finished within a half an hour of the trading session. So I left with what's called a clean conscience. Traders already made money. So they had the 8:30 data release. They had the goose operation. So we know about 413.80. That's a spot. It can be overhead resistance. It was. You saw that. Above that, the target becomes a zone between 514.75 and 515.35. They even went a little higher. You could see up here 515.35, but that was a target, not necessarily a short trade, just a target. From where? From down there. This is what we call a whopper type of trade. We take a profit, we put a base hit in our pocket, which allows us to hold another portion of the trade, a trailing position. Could be half the position, could be 60% of the position, could be 30% of the position. Each trader makes that choice by themselves, but it allows us what we call a risk-free, emotionless trade. It's how we get more out of the trade, guaranteeing ourselves a base hit. We put money in our pocket, and base hits do what? Yes, they put you in the Hall of Fame. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. Showed you the morning trade. We caught low of day. Again, pause them, read them, double check the work. 9:16 before the market opens. There it is. 511.95 down to 511.25 is a zone of support for a bounce back in the other direction during a morning shakeout operation. What did they have? What do you call this activity right in here? That is a morning shakeout operation and the reversal. They gap them higher, make it look really good. They suck the traders in. Traders are buying the market long. They pull the rug out, issue a series of pies in the face, and then they reverse them back in the other direction. They do it just about each and every day. We make a living on the morning trade. Pause them, go back to the chart to double check the work. Today was a short day from a notes perspective. I was only here for a short period of time, but very happy that we caught the trade, the morning trade, the low of day. What's going on over in Camp IWM? I find this very interesting. So the spiders were up about 1% today. The S&P was up about 1%, but the IWM was actually down a little bit. It was down 28 cents today. Why not participate with the rally? Interesting information. The IWM is, in fact, my favorite market leading indicator. Now, we'll see in a few moments the transports were up, but my favorite market leading indicator was not participating, had relative weakness across the markets today. Interesting development. It's a puzzle piece. It's on the table. Doesn't directly tell us what's happening tomorrow, but this is information that we want to continue to watch. If we continue to see divergences, we know one thing or two things that'll happen. It's either one or the other. Either the IWM will catch up to the spiders on the upside, or it's a fake out type of divergent situation, and the spiders will come back down and catch up with the IWM, favorite market leading indicator, on the downside. We're watching it each and every day for evidence of what's going on in the broader market. It's one puzzle piece. What about the folks down at the transportation department? They were up about $100 today, a little less than that, a little more than half of 1%. Above all the moving averages, the trend is your friend. And you can see here from a weekly chart perspective, we look at this each and every night. You have a consolidation, eating time off the clock box type of situation. Above all the moving averages, that's bullish. That's what we've been saying each and every day, each and every week. This also is bullish, riding the moving averages. Above the moving averages, bullish, bullish, bullish until proven otherwise. What about the Q people? Anything wrong with the Qs? No, they came to backtest the 20-period moving average this morning, ricocheted off of it, finished near the highs of day, up 1.4%. Nothing wrong with the Qs. Tech space is strong. The trend is, in fact, your friend. All time frames above all moving averages. Nothing technically wrong with the cues. Don't forget, we've got tinfoil hat stuff coming up this month. We've got tinfoil hat stuff going on in the first third, let's say, of April. Markets like to run up or down into tinfoil hat events. If markets run up into the 20th/24th, 25th of this month, we're going to be looking for signs and or signals of a turning situation. If they drop them, same scenario. Right now, they're in an uptrend, so we're looking up. They're rising. Can they rise up all the way for another week or so? Here's the XLF. If there's nothing wrong with the financials, there's nothing wrong with the overall market. Up 0.4% today. The trend is your friend. We had numbers. We had 40.10. They did that one. We'll take it off the board now. 40.80 is where they're hovering right now. And if they can continue to push above and stay above 40.80, the next spot is 41.40 from a numerical perspective. Write it down. Put it on a sticky note. SMH, big time bounce back day, up about $7, 3%. Yes, you have a reversal candle on Friday. Can you reverse the reversal candle? You can. What are they doing right now? They're retracing a portion of the reversal candle. A retracement doesn't mean a total take back or recapture. A retracement is a retracement. In the middle of the retracement, things look bullish. It's believed to be bullish. We forget about Friday's downside. We take the market at face value in these parts, and so we're just going to say they're retracing a portion of a big-time reversal candle, and that is accompanied by volume. Talking about Friday's candle, made a new high, finished at the low. That's a reversal candle with volume. We take that seriously versus ignoring it. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.